Morning, guys. It's Monday, October 13th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures up a half cent at 413 and a half. November soybeans up 1.5 at 1008 and a quarter. December Chicago wheat down 1.25 at 497 and a quarter. December Kansas City wheat down 3/4 of a cent at 482 and a quarter. December spring wheat up 1.5 at 553 and a quarter. We had a whipsaw of headlines over the last 36 hours or so. Let's start there.
We sure did. Trade tensions between the U.S. and China have flared up once again. On Friday, President Trump on Truth Social announced plans to impose new 100% tariffs on Chinese imports starting November 1st, raising total tariffs on many goods to 130%. The move follows China sending a hostile letter to the Trump administration announcing new export controls, which are also set to take effect on November 1st. The situation has cast doubt on whether Trump and Chinese President Xi Jinping will meet later this month as planned. Last week, Trump said he hoped to use the meeting to pressure China into resuming purchases of U.S. soybeans. With uncertainty now surrounding those sales, the administration is exploring alternative markets and additional domestic uses for soybeans.
Based on all of this, there's not really any reason for market analysis anymore. This is what moves markets. Trump posts on Truth Social, the markets move. So it was early in the day on Friday that we saw an initial post about China from Trump. It was negative, the market sell off. It was after the close that he threatened the 100% tariffs on China over and above any tariff that they are currently paying. So this caused a big mess in some of the markets that were still open, like the cryptocurrency stuff. We're going to talk about that a little bit later, but big mess. And then yesterday on Sunday, Trump comes back with this: don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. I don't know what to make of all of this, but this is very clearly what the markets are trading. I mean, prior to the Friday morning stuff, everything was quiet. The grain markets were quiet, stocks were quiet. And then Trump starts tweeting and everything goes crazy. Polymarket says now that there is only a 16% chance of a 100% tariff on China on November 1st. So the market and people trading this sort of stuff. And of course, it's 2025, so you can bet on anything and everything that you want. There's a very small chance that there's going to be a 100% tariff on China effective November 1st. I don't know if there's still going to be that meeting that they were talking about around Halloween. At first, it sounded like no way in hell. Now, maybe a possibility. I don't know, but this is where we're at. We're trading the president's thoughts on a whim, and billions, trillions of dollars just kind of sloshing around here as Trump talks, which is again very difficult to analyze.
Soybean futures plummeted on Friday amid increased trade tensions between the U.S. and China. The November 25 soybean contract fell roughly 16 cents, settling around 10.07 per bushel. Hopes for progress on a trade agreement faded, after China announced new export controls on nearly all rare earth minerals. In response, President Trump said there was no reason to meet with Chinese President Xi Jinping later this month, adding that the U.S. is prepared to implement a major tariff increase on Chinese imports.
I'm disappointed by the action in the soybean market this morning because we got beat up pretty good on Friday on the Trump headlines. And despite the fact that he went a little bit easier and had some more dovish comments yesterday, soybeans are up 2 cents this morning. So I was hoping for a better recovery. Big picture, you look at this chart. This is November beans, which is like your harvest price soybean contract year to date. And it's been very much sideways. For those of you guys not really familiar with the soybean market, for the bean market to trade $1 range for 10 months straight is pretty rare. That's a very tight range. Historically, call it the last 10 years, soybeans have been in a range from $8 to like $17. So for us to sit in a range of about $1 and really even less than that recently is it's pretty tight. You've got some trend support at 987. That's a big trend line that a lot of people will be watching if we get down there under this November contract. Here's a corn chart. I figured I'd just throw this in because I've been out for a week. We had kind of a shorter term trend line that comes off of the September highs. We failed to bust through that last week and then backed off. Maybe some support here near 410. Here's SRW wheat. All the wheat contracts look absolutely terrible, whether it's SRW, HRW, spring wheat. They all posted fresh life of contract lows on Friday, and SRW wheat into some fresh lows this morning. Pretty ugly stuff.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of last week's premium videos?
I'll run through all of these very quickly. So I was out, but I did one video with Chris before I left last week: marketing, budgets, and government payments. So there's going to be some sort of government farm bailout. We know that that's coming. It's just a question of details now. And we've been told that it's not going to happen until after the shutdown. It's funny how government shutdowns work. They still got to pay taxes, but nothing else seems to work. I don't know. In any case, there's a right way and a wrong way to approach the government payments as it relates to your farm budgets. And I talked about that with Chris Barron. Jim was on the prior Friday talking about the debasement trade and how it's gone mainstream. This is something Jim and I have been talking about in our Macro Friday videos for years now. Shay kind of held down the fort for us with the premium stuff last week to a significant degree. Tillage Tuesday with Lewis Stern, some great agronomy stuff. Matt Bennett was on. Was that Wednesday, deals, yields, and storage. Shay was on with Chris Barron, time to buy land. This was a very good video that I thought was super interesting. And then Friday, Shay was on with Scott Klosowski. They talked about AI, farm, and grain markets. I thought this one was very, very good as well. If you guys want to see the premium stuff, all of those videos are included in this morning's Standard Grain Morning Update. If you sign up for the premium deal today, it's $50 a month. I'll forward you a copy of this morning's email. You'll see all those videos. Really great stuff. We've got Josh Linville, fertilizer celebrity, is going to be on today to talk about fertilizer markets. So a ton of great premium stuff as always, guys. Remember, we just want to send you content, $50 a month. We don't want to sell you crop insurance. I don't want to talk to you on the phone. I don't want to do your brokerage. None of that. We just want to sell you content and send you a whole bunch of stuff. That's it. So sign up this morning, guys, and check it out.
So as one would expect, stocks fell sharply on Friday after President Trump announced plans to raise tariffs on China. The S&P 500 dropped 2.7%, its worst day since April, while the Dow Jones slipped 1.9% and the NASDAQ tumbled 3.6%. The sell-off followed Trump's social media post announcing plans to implement new tariffs on China. Markets were already due for a correction after a strong rally, with the S&P 500 up 35% since April. Despite the pullback, the index remains near record highs set earlier last week. The tariff news also pressured oil prices, pushing WTI crude below $59 per barrel, its lowest level since May.
I'll tell you what, that move in crude and the negative just lack of any sort of price strength in crude is probably more important to our stuff than anything that's happening in the stock market. The stock market just trends higher over time. That's what happens. But when you get crude starting to slip below $60, it's not a good sign necessarily with regard to economic activity. I've always said that crude is kind of like the king of the commodity markets to a significant degree, and that a lot of things follow, especially now that we've got such significant biofuel ties. Corn is a fuel. Soybeans are a fuel to a significant degree in both cases. The stock market got beat up pretty good on Friday, and we recovered about half of it overnight because, again, Trump went a little bit easier with his tone on Truth Social on Sunday. I was hoping that this is what you'd see in the soybean market. Like, hey, let's claw back and get half of it back on the easier comments, but that's not what we saw at all. So, grand scheme of things, to see a 2.7% correction in one day following this kind of rally, it's really not that much, especially since we got it back overnight. Could a bigger correction be coming? Yeah, absolutely. Certainly possible.
President Trump's latest tariff escalation triggered the largest cryptocurrency liquidation in history. Following Trump's announcement of new tariffs on China, almost 1.6 million traders liquidated, with a total liquidation of more than $19 billion. Over $7 billion in positions were wiped out in less than an hour of trading on Friday. Total liquidation could be much higher than reported, with some estimates suggesting the total may be as high as $30 billion. Bitcoin plunged more than 12%, falling below $113,000. Analysts now consider the $100,000 mark as Bitcoin's next key support level, with a fall below potentially signaling the end of the 3-year bull run.
So this was an absolute mess. Coin Bureau, which tracks the statistics on crypto, said that this was the largest liquidation event, and it could have been up to $400 billion. CoinGlass says that Binance API throttling only reflected 5% of the liquidations during the crash. So apparently there were a whole bunch of massively leveraged bets in Bitcoin, but maybe more so in some of these altcoin markets. So people are day trading, swing trading, highly leveraged bets in these altcoin markets, which is not something that you should ever do. So I've talked about it on the show and in the premium videos a lot. I'm a Bitcoin guy. Own Bitcoin, have for a while, but the way to do it is you buy it, you put it in cold storage, and you don't think about it. if you're trading this stuff with leverage on an intraday basis, you're out of your damn mind and you're going to lose your money. There are only three ways that a smart person can go broke, according to Charlie Munger: liquor, ladies, and leverage. And leverage would be the one in question here. And guys, I would not recommend that you day trade or swing trade in any market, but especially in the altcoin and Bitcoin space. The liquidity in the markets, I guess, just disappeared once the selling started. And actually started before the Trump tweets, but it was really messy. So people had stop orders that never were triggered, because in order for a stop order to be triggered, you have to have somebody to buy it, and there was nobody to buy it. The liquidity just vanished in a lot of these markets. So very, very dangerous stuff. Stay away.
Weekend rainfall was limited across the U.S. Corn Belt. The largest totals were noted in central and northern Missouri. Parts of North Dakota, South Dakota, and Minnesota also saw limited rains. Over the last 7 days, rainfall was more widespread and hit areas of southern Iowa, southern Indiana, Kentucky, Michigan, and Ohio. USDA last released a crop progress report on September 30th. As of September 29th, the U.S. corn crop was 18% harvested, while the soybean crop was 19% harvested.
All right, so we're somewhere between 18 and 100% harvested, I guess, based on USDA data, right? I would estimate, you go back and you look at the historical stuff, we're probably about half done, ballpark, give or take, with corn and soybean harvest. The government shutdown is going to last for a while. Polymarket estimates that there's a 23% chance or 24% chance that the shutdown will last beyond November 16th. So we're talking like another month. I was flying over the weekend at the airports, and it's starting to get a little dicey. I think these people are going to stop showing up for work. So this is a failure of government in both parties. It's an absolute disaster. It's self-serving for both of them. Doesn't serve the public at all. They need to get this thing reopened. I don't care which side of the aisle you're on. What did cattle do on Friday?
Cattle futures were higher. Live cattle were $185 to $272 higher. Feeders saw gains ranging from $147 up to $357. As I just mentioned, fat cattle, they were higher last week. In Nebraska, cattle were $4 to $5 higher compared to the prior week at $234 to $235. And then over in the Western Corn Belt, cattle were $2 to $5 higher at $232 to $235.
Stock market ripping this morning following the Sunday Trump comments. The Dow's up 450, the S&P's up 90 points. Treasury's off just a little bit. U.S. dollars a little bit higher. Crude oil is up $1.05, and the November WTI still just below $60. Gold's up $96 this morning, almost up to 4,100. Have a great week, guys. We'll be back on Tuesday.